Welcome back to Making Money Matter, ladies and gentlemen. I am your host, Kerry Stevenson. Now, a couple of months ago, I was talking to Caleb Stroup. He is the president and CEO of Headwater Gold. Some of you might think, why is he back again? Well, he's back again, ladies and gentlemen, because there's a deal that I think is really interesting. Latest news. I want to bring you up to date with that. Wanted to understand the structure around this deal, what it means for Headwater. And I know that I'm filming this in December. We're coming close to Christmas, and I think there's going to be lots of news. So we're going to keep you up to date. But as I said, this is Caleb Stroup, President CEO, Headwater Gold. They are listed on the Canadian Stock Exchange. The code is HWG. They're also on the OTC as HWAUF. Caleb, great to see you, my friend. How are you?
I'm doing great. It's great to be back. Yeah, especially with good news to talk about.
Yeah, good news. That's why I wanted to bring you back. Hey, just before we talk about this latest deal you've done, can you just literally throw at us the numbers, projects,
Sure.
things?
Okay. Yeah. So we're a gold exploration company, project generator model, about a dozen projects in the portfolio. With the deal we'll talk about today, the total of projects in partnerships with major mining companies, funded by the major mining companies, is total six now. So six active projects, of which right now, as we speak, two are being drilled. Obviously, the one we just signed a deal on is not yet being drilled, but we're expecting that for 2026. So a big active portfolio. And one of the things we'll talk about is the quantum of capital associated with these earn-in arrangements is larger than you'd typically see in a project generator type deal. We've been pretty successful at structuring these to have significant capital contributions from the majors across those six projects. I think that now totals something like 175 million US dollars if they all earn in all the way on all of them, which is not likely, but it gives you an example of the quantum of capital we've been able to access from these producing companies, which are making money at all-time highs and looking to deploy capital in exploration and grow. And so that's where we fit in.
Just for those that don't fully understand the project generator model, I don't want to go on about it too much, but in essence, I guess it's they fund the drilling. It allows for less dilution of your shareholder structure, your shareholder capital. Why do you like it? Because of that?
Yeah, so that's right. You're gonna be diluted one way or another by putting capital into exploration. That's just the way it goes. And it takes a lot of capital to develop a target from early stage to discovery stage to drill off. And you can suffer that dilution by issuing shares and raising money in the market, or you can protect the corporate entity itself, limit the dilution there, and have incremental dilution in the asset level itself by allowing someone else to spend their money and earn incremental interest into one particular asset. So that's kind of the big thing, is where the dilution comes from, at the corporate level or the project level. But the other thing that I really like about this is the dilution only happens in a success scenario. When you find something and they continue to pump capital into it, rather than if I go raise 10 million bucks, I'm issuing the shares, drilling the projects. Early stage exploration is high risk. That's the way it is, especially when you're taking big swings at big targets.
Right.
And so, if the major is writing those checks to take the swings and test the targets, we don't necessarily dilute either at the project level or the corporate level if it doesn't work out.
Yeah. So it's almost like the success-based fee way of doing things.
That's right. So the structure that we look to put in place is maintain a meaningful interest in a major mining company size new discovery, plus a royalty component as well, without having to dilute the company at a corporate level along the way. So, there's different scenarios where both models, I think, can and do work for sure. But to be able to operate a big portfolio of projects and have active exploration across that portfolio, over a sustained timeline, I think this is by far the best mechanism to do so.
Yeah, and you've got skin in the game, so you're protecting yourself as a shareholder and your other shareholders. I want to get straight into this latest one that you've just announced this week, which is going into an earning agreement with Centerra Gold. Talk to us about which project, how much, and the structure.
Yeah, so this is a project called Crane Creek. It's in Idaho. We have properties in Idaho and Nevada right now within Headwater. Nevada's our main focus, although we have this relatively small portfolio of projects in Idaho, which is basically the Nevada geology extending across the Idaho border. That said, it's geologically very similar, but our focus generally has been in Nevada. And so this project is a very high quality project that sat, just below the priority list for us to even go drill ourselves. We had thought about it a couple times, but the relationship we had with Centerra, which originally started through a 9.9% equity position they took in the company about a year ago, sort of inevitably led into their interest at an asset level here, which is, I think, just a great way to build that partnership further, and culminated in this deal, allowing them to fund the exploration here. So, like all of our deals, all 6 of our deals right now that we have with majors, which include now Centerra, Oceana Gold on 3 projects, and Newmont on 2 projects. These are all staged earn-ins. So there's a 3-stage structure, and I'll use the Centerra Gold one as an example at Crane Creek to walk through this. The stage 1 is a $10 million US expenditure commitment to get to a 51% initial interest in the project. Of that 10 million US, 2.5 million is guaranteed. It's a firm minimum commitment that they either have to spend into the ground or pay us a difference in cash if they decide to not complete that spend. So that gets them to the end of stage 1. And obviously, if things are looking good at that point, they'll continue. They have an option to spend an additional $15 million US to get from 51% interest to 60%. So obviously, so the numbers are, the dollar figures are going up, with success, incremental 9% interest for 15 million US in that stage 2. But one thing that's interesting about this one is at the end of stage 2, so they'll have spent 25 million cumulatively between the 10 million stage 1, 15 million stage 2. At the end of stage 2, we also get a royalty in addition to our retained 40% interest in the project. So that's a 2% NSR on the ground that we staked and built in this land position, which is the majority of it, and a 1% NSR on some inlier claims that we put together that have an existing royalty burden on them. So that's an attractive mechanism for us to vest that royalty along the way. But the 3rd stage is also a very significant piece of the puzzle here too, where they can get from that 60% interest ultimately to 70% in stage 3 by delineating a 1 million ounce plus gold resource, and bringing that to a PEA level. So at that point, we'll have a retained 30% interest plus a royalty in a Centerra-sized asset that has a PEA on it, and you can use that to clearly show your the value of the property.
Okay, so the deal is done. How fast are they going to get underway?
So the deal is done, as of a couple of days ago. We're still working on the sort of the fine tuning of the 2026 program. There's sort of a placeholder budget in place, and now that the deal is officially executed, they can start to allocate those budgets officially and work with us to put together the final game plan for targets that we're going to drill. It sounds like they're pretty motivated to get out there early on in 2026, as soon as the weather makes it convenient, which in this location is pretty early on in the spring, if everything comes together. But I expect in the next month or 2, we'll be able to finalize those plans and kind of nail down the exact targets we'll be pursuing. And the top priority, we had defined a series of targets that obviously appealed to them, and it's just a matter of what order these are tested in and where the priorities lie. But it seems like it's quite likely that there'll be a combination of an approach where some of the targets that are more refined with a little bit of historic drilling that shows gold in them, and has, sort of open-ended at depth. Those targets will see some additional work, as well as some of the broader property scale, big swing type targets to establish the real footprint of this gold system, and see if we can determine line of sight to a real major mining company size asset fairly early on.
Talk to us about where, like, because you said Idaho, it's close to Nevada. There's a bit of, it could be along the same sort of structural trend. Is the project that they've earned into, is it in an easy access? Because I'm looking at it from a longer term point of view. This is early stage, ladies and gentlemen, so it's going to take a while to get underway. But what's the value associated with it? Where is it? Is there infrastructure around?
It's quite easy to get to and operate.
Okay.
There's, paved roads fairly close by, and you can then hop on a well-maintained ranch road that gets you right onto the property. Fairly low elevation on what's called the Snake River Plain. So it's not, a river runs through it type, high mountain country in the middle of Idaho. It's out
Yeah.
at more, it looks more like Nevada than anything else, rolling sagebrush covered hills and things like that. And it's in a part of the world it's not by itself in terms of gold and mineral plays. It's just probably not as well known as it would be if it were in Nevada. But just next door, less than 10 kilometers to the south, there's a million plus ounce epithermal gold deposit that's owned by a company called Nev Gold that's developing that asset.
Okay.
And to the north, there's another very exciting story. One of the most exciting stories in Idaho right now, the Hercules copper discovery, is in the same belt of rocks, in the same part of Idaho. So this is definitely an area that's getting a lot more attention over the last just 2 to 3 years than it has for the last 2 to 3 decades, I would say.
One of the things, ladies and gentlemen, that Caleb just said is an epithermal deposit. Some of you will go, what does that even mean? Well, let me tell you, epi just means shallow and thermal is fluid. So it's possibly from surface, is it? So we're talking about a shallow deposit with a lot of fluid coming into it. I just wanted to explain that to our audience.
Yeah, so this is a liability of me being a geologist and a CEO
I
at the
know.
same time. I can't help but sprinkle in terms
But
from
that's
time to
my
time.
job
But
is to go, let's just bring it back down.
yeah, you got it pretty much right. I mean, the best way to think about these is fossilized hot spring type systems where you had hot fluids pumping all the way to surface, and carrying metals with them, and the metals get deposited out along the fluid pathways, relatively shallow up in the Earth's crust. And these, in the cases of the projects we're working on, they're extinct hot springs. They're no longer active,
Yeah.
but the gold that was left behind along the way, it is still there. So that's probably the best way to visualize it, is think about Yellowstone after it, kind of shuts off and dies,
Yeah.
and then drilling underneath there to see if there's any gold in those geyser vents.
Okay, so with this deal, because I just wanted to focus on this today, because if you haven't seen the previous interview I did, ladies and gentlemen, it was a couple of months ago. It's on the channel, where we did a deep dive into Headwater Gold, who they are, the projects, et cetera, et cetera. You did mention, Caleb, that Centerra became a shareholder. I think that was about a year ago, was it?
Yeah, a little over a year ago. I think September or October of
Okay, so just
2024.
over a year
Yeah.
ago. My question is, you've got a dozen projects. Why did they like the Idaho project? Why the focus on this one? Because 25 million, it's a substantial investment.
Yeah, I mean, I can't speak directly for them, but I can intuit a few things
Combined.
that they do have an active footprint in Idaho. First off, they have a growing interest in the Western U.S. and Canada as well, but that's definitely a stated global priority is to expand their platform in the U.S. So we can start there, and then in Idaho specifically, they have a molybdenum mine in Idaho, so they're familiar with the lay of the land in Idaho, and a couple of existing exploration assets that they're fairly active on. And so it's, I think, generally a part of the world, both in terms of the infrastructure and just lay of the land that they're quite comfortable with, but they also are very familiar with the geology and operational aspects of working in Idaho. So I don't know exactly why, but from my viewpoint, is a very logical fit that they would look to expand what they're doing already.
Okay. Well, I just want to find out from you just quickly, if we could, news flow as we head into 2026, because I'm sure you and I will talk again early next year, but just give us a quick snapshot, if you like, because I know it's going to be busy. Give our beautiful audience a snapshot of how busy you guys are going into 2026.
Yeah, so as I already said, we have two drill rigs still operating right now on two different projects, one funded by Oceana Gold and one funded by Newmont. And those rigs will run till just before the holiday, I think. We'll try to wrap up and give everybody some time off so they can get home for the holidays. And then, yeah, coming into the very first part of the new year, we should have assays beginning to roll in and news starting to come out. On top of that, across all 6 of these projects, it's still a bit vague exactly where and when the 2026 drill programs are going to be kicking off and how everything's going to be scheduled. We have a pretty good idea, but we haven't been able to exactly announce the schedule and sequence and magnitude of all those programs. So that'll be I think a substantial thing to watch for, is what to expect in terms of meters in the ground on these projects in 2026. And we're gearing up for a busy year, probably our busiest ever.
Wow. Well, it's been great to chat to you again, ladies and gentlemen. As I said to you before, like 12 projects. It's a prospect generator model, which means out of those 12, 6 are going to be funded by the majors, 3 by Oceana, 2 by Newmont, and now 1 by Centerra. So I wanted to bring that to your attention today. I think there's a lot of news flow coming forward. Caleb, last comment goes to you. What would you like to tell our audience as we sum up?
Yeah, I mean, I think we covered a lot of ground here. I think the big thing is, the time that we're in right now, that with the market's starting to heat up, I think we offer as much exposure to exploration, true exploration, looking for big major mining company assets, as any other company really on the planet, because of the footprint of projects that we have drill rigs turning on at any given time. I think is pretty unique. And if you like shots at early stage exploration drill plays, I think have a look at these, because you get a lot of them for your money.
I love it. Quite a few people turn around and go shots on goal. I love that terminology. Lots of optionality there. Caleb, as always, great to chat to you, and we'll talk to you in the new year. Thanks so much for joining me today.
All right. Thank you very much.